We've got HDFC Bank earnings there on your screen. Q1 PAT has come in at 1840 crores versus an expectation of 1848. So the PAT figure is probably in line with estimates. We look for the NII figure as well, but the PAT slightly below expectations, if one may say so. Stock now down about 2%. Let's see if we've got other numbers coming in as well.
No, we don't have, Sandeep. We just have the PAT figure, which is largely in line because the 18-hour poll was throwing up a figure of about 1848 crore rupees, an uptick of 30%, and that seems to be really a status quo when it comes to HDFC Bank's performance. So while that has been taken care of, we need to see what the NII is at, because we're expecting a 24% uptick from HDFC Bank this time around. 4329, it's the key number that you need to watch out for when HDFC Bank's NII is concerned. That is, of course, just the PAT figure that we have right now. We're expecting the net interest margins to be steady on a year-on-year basis, and perhaps a slight dip is what we're expecting when it comes to the sequential figures. That's the NII for you, 4418, and that actually has come in higher than our estimates because we were expecting 4329, so 4418 is what HDFC Bank has delivered. The fee income we're expecting to be strong. The asset quality is going to continue to remain healthy. More importantly, the loan and the deposit growth as well is likely to be above the industry average of 20 to 24%. However, HDFC Bank has now gone down by about 2%, but that's largely got to do with the way the entire banking pack has moved. Remember, the bank nifty itself has seen an open interest addition of about 27%, and you're seeing the banking pack really drag down in trade today. The gross NPAs, they are status quo at 1%, and that is unchanged on a sequential basis. So that, of course, is a stable figure that HDFC Bank has posted this time around. The net NPAs, they've gone in a tick higher this time on a sequential basis, 0.3% versus a comparable of 0.2 that's last time around. The provisioning as well, my sense is, has gone a bit higher. So that is just perhaps the only disappointing factor, because this is a quarter of high provisioning from HDFC Bank. While the stock is still lower by about 2%, both of the top as well as the bottom line, HDFC Bank has delivered a decent performance.
You've got Poonam Sani, a banking analyst who tracks the sector very closely, joining in with a quick review of these earnings. Poonam, on the face of it, this is in line with what the market was expecting?
Well, honestly, Sandeep, both on the net interest income as well as the profit results do look good. But key factor again here to watch out is slightly in terms of the gross NPA. The gross NPA is at 2719 odd crores. So there's a slight increase in the gross NPA on a sequential basis. Although the gross NPA number is the gross NPA as a percentage of your gross advances is at 1%. And even the net NPA is around at a very stable quarter-on-quarter basis. But clearly, there is an increase in the gross NPA on an absolute number, and we would have to watch out for the management commentary as what has led to that. But overall, on the margins front, just looking at the net interest income growth, which is somewhere around in the range of 26-27%, the net interest income growth is pretty strong. So more or less, the margins are upwards or are in the range of 4.4 odd percent. I do not have the exact margin figure as of now, but clearly with a 27% NII growth, this is a factor of good margins as well as a good loan growth in this quarter. In terms of the other income, the overall the operating profit is at 28%. So good other income is being seen, and the fee income growth was likely to be strong. So that's another good point. We are yet to see the entire breakup of the CASA, but advances growth is, as I'm seeing on the screen, is at 21%. So it's clearly on the expected lines. But key to watch in this would be plain and simple the asset quality trends. What is the management outlook on future asset quality? It remains consistent, but still are there any pressures inherent that are to be seen? Also, the bank has added over 500 branches in the last 1 year, so need to watch out for management commentary on the branch expansion and overall advances, deposit growth, and how the entire CASA ratio would shape up over the next few quarters. Good results, but watch out on asset quality from the management.